And it's 10 a.m. right here in Lagos, Nigeria. Good morning, good evening, wherever the world you're watching from. It's Business Morning, live from Channels HQs. Great to have you share your morning with us. Let's kick off with the markets now. Let's take a look at what's happening with the oil market. We see global oil prices a little change today as investors weighed possible tightening of U.S. crude supplies against a weaker than expected Chinese economic growth. We see Brent crude, that was down about 1 cent, about $78.49 a barrel. The U.S. WTI crude benchmark there was up 1 cent to $74.16 a barrel. We've seen both contracts fall more than 1.5% yesterday, following lackluster Chinese data and the partial restart of some Libyan oil fields. We'll drill down on the drivers later on. Let's check on the grains market now. We see Chicago wheat futures edge higher today, recouping some losses from the previous session as supply concerns rose after Russia suspended its participation from a Black Sea pact that allowed Ukraine to ship grains. Global grain prices will continue to be volatile until market is able to decipher the impact of Russia's withdrawing from the Black Sea Grain Initiative. Looking out for some last-minute performance there for that deal. Maybe we might get a last-minute agreement from Russia. Definitely watching out for that and checking out how wheat prices fare. Let's look at some aviation now. See the international airlines in Nigeria have adjusted the exchange rate for selling tickets to Nigerians to 803 Naira to the dollar. That's officials of the International Air Transport Association. Statement sent to stakeholders in the aviation industry by IATA mentions that the exchange rate will change from 776 Naira 90 kobo to 800 Naira 90 kobo per dollar. According to Global Airline Association, the adjustment is a response to the recent depreciation of the Naira as demand pressure exceeds the supply of foreign exchange. Have advised ticket agencies to close out unfinished ticket sales by the close of business Monday to avoid potential rise in ticket prices. And the Nigerian Port Authority has announced impressive revenue figures for the first half of 2023, generating a total of 191.4 billion naira from its operations. The NPA Managing Director and CEO, Mohammed Bello Koko, expressed confidence in the organization's performance, citing the prevailing trend of shipping volumes peaking from July to December. He projected a revenue growth of over 500 billion naira by the end of 2023, accompanied by increased remittances to the Consolidated Revenue Fund of the federal government. And in line with forecasts by economic think tank Financial Derivatives Company, Nigeria's headline inflation rate climbed marginally higher to 22.79% in June, the highest level in 18 months. Official figure released yesterday by the National Bureau of Statistics, which comes amid the removal of fuel subsidy by government and represents a 0.38% point rise when compared to the 22.41% rate recorded in May. However, the major contributor to the inflationary pressure were the higher prices of basic food, increase in cost of transportation, particularly in Lagos, which recorded 25.7% rise in its inflation rate. We're taking Ondo, Rivers, and Kogi State. All eyes are now set on the central bank's decision at its upcoming monetary policy meeting, which is set to hold on Monday and Tuesday next week. And for the first time since subsidy was removed, all marketers in Nigeria have begun the first shipment of premium motor spirit into Nigeria. The late evening meeting held in Lagos between the Nigeria Midstream Downstream Petroleum Regulatory Authority and all marketers. The authority chief executive of the NMDPRA, Mr. Farouk Ahmed, says 56 marketers have signaled interest in playing in liberalized downstream oil sector. According to Mr. Ahmed, says the number of players now willing to import is indicative of a free market that will reduce the monopoly of the NNPC in product importation. Take a listen.
If you recall, on May 29th, Mr. President, of course, mentioned that subsidy has gone. And we encourage all the marketing companies who are interested in importing to come forward for licensing to import. So this meeting I just called to thank some of them that actually took that offer. We have now about 56 marketing companies that applied for and obtained license to import premium motor spirit. And out of those, about 10 indicated their ability to import in the third quarter, which is July, August, and September. And out of those 10, again, 3 of them already have landed cargoes. Prudent Energy, AOM Shafa, and Emade. And others, like 11 PLCs and others, are also indicating their interest to import in August and September. So it's just actually to call for this meeting to encourage them to import so that they can displace, in a way, NNPC's dominance in the market, because this market is open for all to compete, and we're going to encourage all the marketing companies to come in and conduct their normal businesses in this arena. We are working with FCCPC in terms of consumer protection, so that no marketer takes advantage. But most importantly, what we are focusing on is, like you said, the quality of products coming in, so that it does not affect any motorist or any individuals in terms of damage to the equipment.
And now to drill down on the data for inflation for June, definitely that number came in 22.79% for June, higher than what we had in May, but definitely consensus was it was going to come out much higher. But at this time, I believe this is still in line with the FDC's forecast there. We saw that information released yesterday by the MBS, and it is definitely higher at this point, and definitely we've seen why that has happened, and definitely prices are rising. If you go into the shops, definitely feels more expensive. Well, to help me unpack that, we have Bolanle Agbaji now, Senior Analyst, Financial Derivatives Company, joining me right here in the studio. Great to have you,
Hi, thanks
Bolanle. So yeah, we've been holding our breath for a while now, waiting for that June inflation data. Seen some, comments about it. Some say, it should be higher. But it's 22.79. That's what we're getting. Close to your forecast, though.
Well,
FDC.
to address that, obviously, it was in line with our forecast. But what we attribute that to is the fact that there was obviously consumer price resistance for some time, and that was obviously the most of the month of June. And also there was inventory buildup by manufacturers.
Right.
And right now, when you're having inventory loosen up and them trying to rebuild the inventory, then you start to feel the impact of the price in the market. So obviously that will be reflective in the inflation numbers for July. And also, this kind of situation is not a situation where this price subsidy removal happens and you mainly see increases in price almost immediately. You still give it a bit of some time before.
But we saw the prices go up immediately.
Yes, obviously you saw the prices go up. But when you talk about manufacturers, for example, they don't just increase their price as they see subsidy price removals happen at that time. They do take some time before they feed that into their cost and their final price.
What about the transport industry? Because definitely that translated immediately.
Yes, it did. But also the NBS did come out to explain that, the figures are reflective of, 2 weeks at the end of May and 2 weeks at the beginning of June. So it's not fully reflective of the whole month of June. And I guess that's also a reasonable explanation for the figures that we had seen, the 22.79%. But all in all, it's in line with our forecast. And obviously, inflation is still going up at the moment, and like we all expected. And it will take some time before,
Because we see the MBS explaining right there that the June consumer price index numbers may not fully capture the impact of the fuel subsidy removal and the unification of the
and that's just because they're only taking into account 2 weeks at the beginning of June. So we do expect that the July inflation numbers will definitely be more reflective of what's happening in the society. The fact that cost of living has increased significantly and still continues to rise, although the World Bank definitely believes that before the end of the year we should see disinflation happening, and that's just reflective of the month-on-month. So it's a situation where inflation keeps rising, but the pace would start to decline at some point, and that's obviously different from deflation.
Right, but this is definitely still more pressure, on the average consumer at the end of the day. Even though some expected about 30% But this is still high.
Well, we do expect that, you know, especially the price of the pump price of petrol to keep going up, and that's just because now import duty is reflective of what the actual exchange rates that we're seeing in the market, or the market reflective rate, and obviously that marketers will definitely price that in, and so we do expect that pump price of fuel would actually increase in the coming months, and it's quite sad, but I guess it's the brunt we're expected to bear at this point, right. And then in the medium term, like the World Bank mentioned, we do expect, you know, and obviously when Dangote refinery comes into full force, we expect that the prices would ease out, and hopefully we can actually get back to where we were before.
Right, and consumers need to breathe.
Yes.
At this point. All right, let's look at the food inflation there. About 25%.
Yes.
That's really high.
Yes, that's really high. And, you know, in the month of June, we had seen, you know, shortage of tomatoes as well, and some other, you know, commodities that are reflective in the food basket. And that was obviously because of, you know, the infestation that happened that affected supply. And obviously there was the
tomatoes too. What's that? That disease called again? Forgotten that name.
Yeah,
Lotus something.
Yes.
Yeah,
so
that's still impacting.
Yes, that's definitely what happened, and obviously that happens because you're not seeing the actual amount of investment that it's necessary for that particular sector, and to prevent such diseases, to increase supply, and also shortage storage as well, to increase situation where you can actually store tomato for situations like this that do happen, that is beyond the control of some farmers.
All right, let's look at the states now. We see Lagos now.
Yes.
The most expensive state. Yeah, we see the inflation there, 25.75%. Ondo follows with 25.40%, and Kogi. And looking at Lagos, why is Lagos so expensive?
Well, Lagos
is it time to move out of Lagos? Is that what this is telling us?
Maybe. It seems like it's getting a bit congested, but at the same time, Lagos is more or less the business hub, and whatever impacts or whatever happens with food prices will be felt the most here. And obviously we do produce a significant amount in Lagos, but most of the production happens outside of Lagos, and obviously when you consider the transportation cost into Lagos, that has to be factored into the prices, and I guess that's why you have that situation here. And also it seems like Lagos has more consumers that are willing to pay that price. It seems like many manufacturers would experiment with Lagos consumers first, because you know, there's significant business activity here, and you know, it seems like consumers are willing to would be willing to pay that price for the higher prices that we're seeing in the market.
And talking about food inflation, we're still, all eyes still on that Black Sea grain deal,
yes.
And right now we've seen
Russia is not, yes,
pulled out on that, and we're still, you know, countries are still battling with inflation right now.
Well, and it's going to get worse, especially with the price of bread. There's speculation that the price of bread would increase to about 1,150 naira per loaf, and that's just because from the wheat angle they do although prices right now are still stable and relatively lower, but we do expect that the price of wheat would, you know, slowly climb in the next few weeks, and that's just because Russia has mentioned the fact that some of their requests haven't been met, so they're not trying to sign that deal. But we do hope that, you know, something is done with whatever they're asking for, and they're able to push forward and more or less sign the deal and get back to status quo. But definitely the price of wheat would be affected, and corn, and some other grains that are involved in.
I think we might see some kind of last-minute agreement from Russia.
We do hope that there will be last-minute agreement, and they're just, you know, trying to pull and show who's the boss right here. But
yeah, playing hard to get at this point.
Exactly.
All right, let's look at oil prices now. We see oil prices are down on the falling U.S. dollar, but this morning
actually gone up. Yes,
we've seen a rebound this morning.
Yes, despite
same old volatility we've
seen
in that market.
Exactly. And obviously it's interesting that it's gone up now, despite the fact that you're seeing low growth from China, and also the fact that there's increased production in Libya as well. But I guess the output cuts would hopefully start to penetrate and be felt more in the prices of oil. And obviously, as we for us in Nigeria that were benefiters of, this oil price. We do expect that oil prices continue to inch up. And obviously, coming to the story of cocoa as well, the price of cocoa is currently at about $3,350 per ton, and also is expected to keep going up just because Ivory Coast has mentioned that they're trying to reduce their exports at the moment just because they had their harvest for this particular year, so 2022 to 2023, had declined from about 2.22 million metric tons to about 2.14 million metric tons. So we expect that the prices of cocoa would increase, and obviously we benefit from that as well.
All right, let's look at the Naira. Now, back in the news again, we hit a new low, new all-time low at the parallel markets. This was expected, really, and it's a double whammy at this point. You have currency devaluation, you have rising inflation at this time.
It's not nice to feel at the moment, but I think one thing we kind of have to look at the positives when it comes to some of these things. I guess
it would be great to see the positives.
Yeah, so the positive of this is that there's convergence happening.
Right.
The fact that obviously it's converging at a rate that is higher than what most people expected or what most people would prefer. But all in all, it's still converging, and hopefully at the point where there's full convergence, we start to see exchange rates, inch up a bit. And obviously, you're seeing, new developments, especially with bilateral trade development between Nigeria and the UK. When, that is solidified and that happens, we're able to boost our exports via that, and hopefully not our imports.
All right.
Boost our exports from that, and obviously that would be translated into better rates of exchange for us.
Yeah, we need more exports.
Yeah, and the fact that they're ready to accept Naira directly for, this particular trade. Although the brunt of it will be felt with the government or the CBN, but all in all, within the individuals in Nigeria, they're able to, carry out business as usual, and there could be economic growth and, hot money coming into the country, and that would obviously increase supply of dollars. And obviously, that's the path that is supposed to take, and we do expect that that particular path happens sooner than later.
And hopefully some cold money.
Yes.
And
I forgot to mention, obviously, the IATA rate too has more or less dropped, and obviously that plays into the increasing fares or travel fares, air travel fares for many individuals. Not nice, but it's still convergence.
Still convergence. Yes. So we'll take convergence as the positive.
Yes, like we always needed for a long time coming.
Yeah. All right, let's look at what the MPC is going to do next. The meeting's coming up next week. They're having to deal with rising inflation, currency devaluation, and rising food prices, cost of living, and all of that. What are they going to do? Are they going to raise rates?
It's between raising rates and keeping the status quo. But when you have a situation, it goes back to the books. When you have a situation where there's rising inflation, to tackle that inflation, you have to keep increasing interest rates. Like the US, for example, increased rates for about 3 years before they started to see, or 2.5 years before they started to see, that drop in inflation. So we more or less have to keep that consistency going, so that and the fact that, there are other policies to support this rising interest rate, we expect that it will be felt more in the economy and can pass through the banks the right way. And obviously, it's not
but we saw they reduced the CRR for merchant banks. So is that an indication of what's to come?
Yeah, so it's like the increasing interest rates, but they're also, lending out on the other hand. So it's trying to increase, lending to the real sector, or boost lending to the real sector.
Liquidity.
Which will boost liquidity.
And boost inflation.
Yes, but all in all, it's expected to be felt through the manufacturing sector. So in all, more or less, you're trying to increase productivity within the economy. So we hope that that's channeled towards productivity, and that can obviously be beneficial in the long run, as opposed to, feeding more, liquidity in the system.
What we're seeing in the domestic commodities market right
Obviously, prices remain high, and stubbornly high. In the nearest future, we don't expect that, no right seller at the moment would drop prices, obviously, because of the high cost environment. So that's just what we're seeing.
Imagine battling stubborn inflation. You need stubborn policies. to battle stubborn inflation?
It's not nice, but it's the reality of where Nigeria is. And obviously, one has to remember, Nigeria is not the only one in a particular situation.
Right.
A lot of African economies are battling, similar issues. You have hikes in rates, or CBNs across Africa trying to increase rates or keep rates as high as they can, because the world economy is going through it at the moment. So we always have to remember Nigeria is not alone.
Yeah. We're not insulated at this point. Thank you so much, Bolanle Agbaje, Senior Analyst, Financial Derivatives Company. Thank you
for having me.
All right, so after the break, take a look at the real estate sector contribution to Nigeria's GDP in the first half of 2023. That's our next conversation. Do stay with us. Welcome back now to our next conversation. According to the report released by the Nigeria Bureau of Statistics, construction contributed about 11.79% to nominal GDP in the first quarter of 2023, higher than the 9.68% it contributed a year earlier and higher than the 10.16% contributed to the fourth quarter of 2022. Also, we see real estate services contributed about 4.46% to the nominal GDP in the first quarter of 2023. Well, joining me now for analysis is Engineer Dr. Oyeleke Ajiboye, MD, CEO, Efficacy Construction Limited, joining me right here in the studio. Great to have you. Good morning.
Thank you, Mr. Ladi. Good morning.
Yeah, so it's all about inflation right now, and definitely I know your industry is feeling its own kind of inflation. Break it down for us. How do you see this figure that came in? Was it to your expectation?
The figure is my expectation, actually, because when you look at the statistics that came out from CBN and FNB and Federal Mortgage Bank in January, so we still have about 28 million housing deficits. So, there's a huge gap to catch up with. So people will keep moving, real estate will still keep going on, construction will keep going on. However, we'll now have the challenge of what is affordable. We'll now start having the challenge of where is it going to. And then, the market has different segments. So we have the high end, the middle, the lower. So the middle is going to shrink, and then there will be a lot of market for the low end. So you start seeing people migrating. Some people will leave Lagos, start living in maybe Abeokuta or Shogbo, because, so we look at inflation now with prices. Actually, the way prices of items and commodities have gone up is even higher than the inflation rate, actually. So when you look at it that way, house rent is up, transport is on, school fees is on, school bus is on. A lot of people will now start looking at their budget. What do they have? What's the available disposable income? At this level,
you still have that dream of owning your home.
Exactly.
Your own home.
So it's either you go to your village or you start going to. So that is still a real estate transaction. So the numbers are still going up because you have a population. There is still, the need is there, and there's really no way to fill up that vacuum for now.
All right, let's look at the first half now of 2023. How do you see the contribution of construction industry and real estate to Nigeria's GDP?
So from the data you just shared, it actually shows that 2023, the first half is actually better than 2022. However, a couple of things would add up to this. Like I said, the demand, and the second one is when you look at the reason why people are investing in real estate. Real estate is one of the easiest ways to passively invest. So you want to keep your money somewhere, let it give you income without bothering yourself. Real estate is one of. And when you now look at inflation again, one of the easiest ways to hedge against inflation is to use real estate. So this will actually still keep pushing investors in this direction. However, the same due diligence you do when you want to buy a stock is the same thing you have to do when you're buying a real estate. So that as you're trying to hedge against inflation, you don't lose your capital.
Definitely, when you hear investment in real estate, first thing that comes to mind is it's expensive.
Yeah.
I don't have that bulk money to put down and to buy that land or that property at this time. And this not being a credit economy, you cannot, afford to, buy a house, through the banks and all of that. It is very expensive. What's the way out?
So, this conversation is very interesting because considering what is happening now with the high price of things, I think one of the things the executive should advise the president is to raise the limit on Federal Mortgage Bank housing. So all these 8,000 palliative for the very low people, let's also look at ways to increase that 15 million housing bar, the limit that you can. There's no 15 million house anyway, actually. So when you raise that to about 25 million, you're actually giving people more opportunity to own a house at a very, very low single-digit interest rate. That will also help people to pay, because how many people can afford 20 million at a go, 30 million at a go? So when you do that, the civil servants will really, really take advantage of this. The entrepreneur on the street, the business owner, the people that are in an employed system, the private sector can take advantage and own a house and a property. So when you also look at real estate, there are other organizations that do a lot of instrumental payment plans and all of that. However, so as speculative as real estate is, there is no excuse not to do your due diligence. I keep saying that. I'll give you a scenario. A friend of mine bought a property, and then it was not a friend, a staff of mine was asking me to give him a guideline, and then strangely bought the property in my village, in Osun State. He didn't know. He didn't go there. At the time he bought it, the marketing strategy was pay 500,000, pay over 1 year. However, the value of that property now, at that time he bought, was 50,000 naira. That person has paid in installments, but you will not get value for a long time. So as much as possible, getting opportunity to pay in installments is good, but also do your due diligence and be assured that at the day you are buying, you are making profit. That's the way to invest in real estate, even if it is low. So no matter how low it is, be sure that you're actually getting value from it.
And talking about getting value, we see most of those adverts, most people, marketing different lands and the outskirts. They're supposed to be cheaper, and you see them, telling you can pay in installments. You see the fancy pictures, of the estate, but you get there and you can't even, identify what you're buying. Is that still the right strategy, or how do you go about it? Because it is good, you can buy while it's undervalued and wait for development to come there. That's also, a good strategy, but you can also miss it.
Yes.
With that.
Yes, you can also miss it. So for us, I've been in this sector. Our company has been active for about 15 years. I will tell you that those things have the pros and the cons. So for investors that are buying, you must be able to know the company you are buying from. When push comes to shove, are they able to stand with you? So because when you're doing a long-term investment, doing a land bank, you are not developing at the moment. You are expecting development to push the price of the property up. So I'll give you a scenario. In 2009, we bought a land somewhere on the Ibeju-Lekki axis for 650,000 naira. That land now is 20 million naira.
Wow.
So when you look at the returns, when I was trying to calculate it recently, it's over 3,000% returns.
In just how long?
In just 15 years. 3,000. There is no investment that can give you that. It's just land. However, there are a couple of things that have to be done to mitigate any issue of loss. So this particular land, when we bought it, that's a gazette. Along the line, we discovered that the gazette had an issue, so government cancelled it. That means the land is no longer valid. So we had to make sure we buy another one to give subscribers, and at the same time go to appeal to the government that we were misled. And fortunately, the governor at that time was Governor Fashola. He gave us back the land with the CFO. But that took like 7 years for us to get it. So after getting it, we just left the land and let it appreciate. So when you look at that cycle, we fenced it, we've been nice to the neighbors, intentionally protected the land. So when you look at it, for an investor, it looks very sweet. But not all transactions are like that. So as much as possible, your title has to be good. You must be able to define why you're investing in that real estate. What's your portfolio appetite? Is it for long term? Is it for short term? You could actually buy land. I see a time when Lagos-Ibadan Expressway will be like Ikorodu Road. It'll be very busy. Lekki Expressway is the fastest developing corridor. Develop the corridor with the highest investment in Africa at the moment. So I see a lot of development, but the fact that the place is developing, your due diligence must be top-notch.
And talking about due diligence, titles are a big issue, and getting the titles at the right time is a big issue. You see, they said most of the properties or lands we see right now in Lagos, a huge amount of that have no titles. Yet they're still being traded, but you cannot use that, to.
So when you buy a property that doesn't have a title, actually it's too risky, because one of the reasons you are buying the property is either to live in it, make it an asset, trade with it, or be able to sell it some other time. So when a property doesn't have a title, it's a gamble. It's like a Ponzi. If it doesn't have a title, what are the titles in Lagos? A certificate of occupancy, a registered gazette. And when you come to, there's governor's consent, other secondary titles. So when you come to the Lekki axis, there are different ways at which you can actually acquire a title, whether through government allocation or through annexation. So if somebody tells you that he has a freehold in Lekki axis, you have to watch it. If they tell you that they have registered survey, it's not a title. As much as possible, if you come to the mainland also, there are locations that are freeholds and all of that, but get a lawyer, get a good estate surveyor, people that cannot trade their loyalty.
And all of that costs money.
Costs money, but it's an investment. A good investment has to, you can't trade away because you don't want to do due diligence and then go and throw your millions away. It's part of the investment cost. All
right, talking about affordability now, we know off-plan housing sales are quite hot.
Quite hot.
Right now, but what's the strategy to make sure you're not...
Off-plan is very problematic.
Yes, it does come with a lot of problems.
It comes with a lot of problems. Actually, we do off-plan in my company too, and if a company is not well strategized and their cash flow is not well managed, off-plan, I've seen it drown 8 out of 10 organizations that do off-plan. Because as at the time you put out a product, you have an X amount to sell, you have your profits determine the percentage of your profits, the cost of the fund that you are using from the bank, and suddenly prices change. Price of items go up, like what we're experiencing now. It's very difficult for you to go back to customers and say, hey, the price have changed, you want to renegotiate. We don't do that. Some companies do it, but you know what it does is when you do that, you build a wrong history towards your business. So when you don't do that, you have to make sure that a certain percentage is what you are doing off-plan. So we use off-plan as a marketing strategy. So if we have 100 stocks to sell, we might do off-plan for only 20, 30. Also have land, so that any loss you suffer from the off-plan, the ones you sell later can cushion the effect. That's actually the best way. But strangely, you can still find some companies sell out everything on off-plan and then they drown. Off-plan is a very good model for the average person to build up cash flow and then be able to acquire property.
Are they really that affordable?
Off-plan, some are affordable, some are not affordable. So it becomes unaffordable when you also want to sell the future price. The future price is, I'm buying an off-plan now, and I am telling the person that wants to pay, that in 3 years' time, this is what your property is, and I'm selling the price of 3 years' time to you. The buyer at that point is actually losing.
All right.
Yeah.
So it's all about the battle now. Everyone's trying to hedge against inflation. Everyone is running, looking for how to hide,
to balance up,
from inflation, even with your investments. Looking at real estate right now, is it still that hedge?
So, looking at real estate, all things being equal, all data's due diligence done, real estate is the best. Yeah, can tell you.
Not because it's your industry, though.
No, it's not just because it's my industry. So I also invest in stocks and bonds. So when I look at it, the maximum I can get on any stock per annum is maybe 20%. If the stock does very well and they give me bonus and I get a lot of dividends, maximum 25%. If I get a good land and I leave it passively, the only challenge with real estate is not liquid. So the day you need cash to quickly do some things, you cannot easily just sell.
Right.
But when you talk about the long-term benefit, it is the best. So as much as you want to diversify your portfolio, you must have an investment that gives you liquid income anytime you need bulk cash. And then the real estate is like the surest backup you can have.
Surest backup.
Yes.
All right, even though we all need liquidity. But, well, definitely we know interest rates are really high right now. MPC is meeting next week. Hopefully not another interest rate hike.
But we both know that that's going to happen, really.
It's going to be a hike, definitely.
With the inflation rate that just came up. Maybe.
Or maybe a pause, because we've seen a pause in the U.S. Well, thank you so much, Mr. Oyeleke Ajiboye, CEO, Efficacy Construction Company. It was great having your perspective.
Thank you.
Thank you so much.
Yeah.
All right, now, well, we're going to be heading to the markets. Definitely, we saw that positive close yesterday for the local bourse, and definitely talking about, hedging against inflation. Heard about equities being that hedge, heard about real estate. Everyone's trying to hedge against inflation, and also gold, that has been touted to be, a great hedge. But we have she's going to be telling us about that hedge. If the stock market right here, even though it's had an incredible first half in 2023, we've seen some stocks return incredible gains, even right here, on our local bourse. I'm talking about the NGX, and we had a positive open.
Yes, we did have that positive open for that market.
Close last week.
Yes, we did see that phase, that pullback phase in the market, even though the market condition is bullish, but we see that pullback phase, which is, ultimately necessary for the market to have this correction, after all the profit that, investors have made.
Like how I see pullbacks is like a bus, stopping at bus stops. I see the pullback as a stop at a bus stop.
Okay.
If you're trying to join that journey.
Yeah, just, that look, and you have to know if is that the right entry position? Is that the right entry position for you at the moment?
So much to consider.
So much to consider. Am I going in the right direction? Am I going to take me to my destination?
Yeah.
Am I going to make, returns, for that journey? Am I going to get value for that, journey that I'm going on? So that's what you have to consider.
Even though it's a pullback.
Even though it's a pullback.
Is it a good investment?
It's still, you have to consider all that. And, frankly, I was quite, surprised when I saw that, that tweet from the MBS where it's saying that they didn't fully capture the impact of the fuel subsidy removal on the FX unification policies.
Right.
That's so now June inflation numbers. Is it the correct number? Is that what investors, is that what companies, is that what businesses should be working with at the moment? So that's the thing to think about.
That's a big question there, because
that's the thing to think
everyone
about.
was expecting much higher.
Much higher, and then we got this 22.79% uptick.
Yeah, but it is what it is.
Slight uptick, but the MDS did say...
That's the data.
The MBS did say didn't fully capture it, so that we do expect that reflection, possibly in the coming, data, for July.
Exactly. Looking out for July now.
So we did see that trading activity up for the equities market started the week on a positive note. It was driven by investors' interest in Hebbion Holdings, and this is despite the power tussle in the company. The company share price jumped by 9.8% yesterday. Access Holdings also drove the market, and Giregu. So we did see that index going up 0.6% yesterday to settle at 62,943 points. Market cap still at the 34 trillion naira mark, and month-to-date and year-to-date results are still increasing to 3.2 and 22.8% each, which is fantastic for the market. Let's look at the volume and activity charts. Let's see how it performed. Look at total trade increased. The volume rose by about 18.2% to 710 million units, valued at 13.83 billion naira, and all transacted in over 8,900 deals, lesser deals than what we had on Friday. Now, sectoral performance, however, was a bit mixed. We did see banking and insurance indexes recording gains. For the banking stocks, we did have the tier 1 banks, boosting their counter, GT, Kozini Bank, Hebbion Holdings, Access Holdings, all flying high in yesterday's trading session. Consumer goods, we did see PZ Cussons, Dangote Sugar pulling back that counter. We see industrial goods, big drop for Dangote Cement there that pulled that counter down, despite the gains in Lafarge. Now, insurance, we see AXA Mansard was up, Universal Insurance, Coronation Insurance was also up there, and oil and gas, we didn't see that pullback in Eterna. Eterna Oil was at 0% buy yesterday, and that also knocked out the gains we had in O&O. Now let's look at the top trades and see who led the chart. Sterling Bank led that chart, 65.95 million units traded yesterday, and I think the share price is about over 3 Naira now. That's a big one for that stock price. And Transcore also following closely. A lot of buy interest in Transcore yesterday. Unity Bank also up in yesterday's trading transaction. Now we're going to bring in Ambrose Omodion, is the Chief Research Officer, Invest Data Consultants, to give us, the current market conditions, if we're still bullish, if we're bearish, and how far the market is going to go with this rebound we just had. Good morning, Ambrose. It's good to have you on the program.
Thanks for having me again, Nini.
Ambrose, we did see that positive, market sentiment yesterday, bullish return, a rebound for the market, which is a great start for the week because, investors, we did see that pullback phase in the market, even though we're on a bullish run. How would you say investor sentiment? How would you grade investor sentiment in the market at the moment?
Actually, like what you just said, as at last week, the pullback, is expected, across the, different level of the market, even good retail investors, institutional, because in any market of the world, we don't expect the market to remain an uptrend. They expect to be a pullback or what we call price correction to create opportunity for, for new entrants to come into the market. And also, institution that since the new government came on board, we have seen straight positive 7 weeks of of market gain. For good 7 weeks, for me, seeing a mystery last week, 2 days up and 3 days down because of profit taking was not surprised, and so it's expected. The good thing is that, yes, as we speak now, that created opportunity for investors to take advantage of that pullback, which we saw yesterday in the form of rebound. And this rebound also is not just artificial. I will tell you, this rebound is also supported by some from data and also investors are positioning ahead of what more earnings to hit the market. We saw the two number that came from UCAP and Infinity Trust Mortgage, and also from Geregu. These are the numbers that came for Q2 half-year results, and they look a bit okay. Apart from Geregu, that we saw a missed number for UCAP and Infinity Trust Mortgage Bank, we saw impressive number coming from them. These are giving an investor an insight what they should expect from the financial service provider industry or sector. I believe that on the strength of this, we saw what happened yesterday that the banking encounter or banking index gained about 7.4% for just a day. It tells you that people are taking advantage of what these sectors, knowing that the inflation that just released yesterday, we saw that about 22.79 for the month of June, which I believe that forecast before now from economists and analysts that we're expected to see 30% and above. But with the data we saw, it was below it, which is also a good thing. But another thing that is very, very important that because we know that this teaching, everyone in every asset class wants to hedge against inflation, the equity market looks, like a very, for me, very important place or an attractive area to be, because once you want to convert what you have to cash, it's better you build what equity. If you go into real estate here, which is another way of hedging inflation, that means you are thinking long, unless you are going to equity, real estate back equity on the exchange again, not going to land for renting, but if you are going to real estate back equity on the exchange like UPDC and others, that also help you to take advantage of what is happening in the real estate sector. But I believe that market is coming back with a good positive sentiment. Like yesterday, we saw 60% buy position and 40% sell position. That we're seeing more buyer gather come back to the market on the expectation of the expected earnings to give a clear direction, and also if the list of the ministerial appointment from the government also made available. Now we're already seeing the inflation figure for the month of June. All eyes are still on what on the MPC meeting. But I believe that from what we're seeing in the economy today, hitting up the environment, another increase in rate will be another danger for the economy. The MPC team also have to think wise and not put pressure on the economy. But I tell you that for now, factors are putting pressure on prices. That means it again will be kind of a catastrophe for me. That means we will leave or what will leave it unchanged to see what will play out going to the next 4 months or 2 months.
Okay, so what's your outlook for the week, especially with inflation numbers that came out yesterday? How much of this inflation do you think the market is pricing in, taking into consideration that the MBS says that it did not fully capture the FX unification and the fuel subsidy removal? How do you see markets reacting to this very quickly?
Let's quickly look at what not capturing the real data from fuel research. For me, it does mean that our regulators or what we call those that propose statistics for us, they need to also sit up so that you mislead or mislead what investors. We saw the same thing happening on Nigeria Stock Exchange since on the 12th of July. Today, to have not seen real data on the exchange, even end of the week. Also, we're seeing another agent responsible for giving us data to invest. We're seeing that they are just giving us half information. But for me, now that we know that they did capture it, let's expect that in the month of July, full capture will be done, and then also give us more insight. That means we're likely to have above 30% that people are envisaging or have forecasted before now. If really they didn't capture the petroleum subsidy removal, let's see that in the month of July, that will likely come. And not for me, going back to how to hedge against inflation, it's a good of the sector. I believe that for investors as we speak now, if you look at what is happening in the physical market, even with all the bonds that were released, I tell you the yield is about 16%. And also, if you look at the inflation rate already, even though they've not captured the oil subsidy, we're seeing already 22.79. That means you are still in the negative return. That means equity space look better for me for you to hedge against inflation now, because we're seeing some stuff in the last just 2 weeks, 4 weeks before the profit taking, even 60%, 40% ahead of inflation. That means we're likely to go back to that space again and make money.
Okay, so equity is the best bet to edge against inflation now because of the negative return we're still seeing in the fixed income space.
Exactly.
Thank you so much, Ambrose Omodion, Chief Research Officer, Invest Data Consulting, for sharing your perspective. So, Ladi, see what you said. You did mention real estate and UPDC came to mind. That's what he said, you know, for investors to take advantage of this inflation, to edge against inflation, like the conversation you just had, and to make real returns. They have to look at other portfolios, you know, spread their monies and ensure that they are not losing.
Because some people might say, you know what, I'll rather just stay in cash. I don't want to lose my money, but inflation is still beating you there. And yeah, trying to make the right decision even in the equities market.
It's quite tough.
So inflation, oh my goodness.
You need a professional.
It's not easy being an investor with all of this inflation, definitely. All right, let's take a look at what's happening in London now. We have Juliana standing by. Right there, great to have you, Juliana. Good morning. We see another data there. Grocery prices in the UK and grocery price inflation basically dropped at the fastest rate since its peak. What's driving that?
That's absolutely right. Good morning, Ladi. Just to give our viewers and yourself some context to where I am in this backdrop, I'm currently at the Institute of Engineering and Technology, where the British government, led by Her Majesty's Trade Commissioner for Africa, John Humphreys, is hosting African ministers across energy, mining, and power to talk about decarbonisation and sustainable development. I will talk to you about that much later, but let's go back to what you were asking me about, which is, of course, the data released this morning, as you quite rightly said, from Cantor, having a look at pretty stubbornly high grocery prices. We've been discussing this extensively. We know that Britain is going through a very long cost of living crisis, a prolonged cost of living crisis. Inflation currently at about 8.7%. One of the reasons why we believe, and economists believe, that it is taking such a long time for inflation to come down is because of grocery prices. Now, at its peak, grocery prices were at about 17.9% higher than the average, the highest it's been since, I would say, the past 40 years. But today we have seen that once again it has dropped by about 1.3% for the 4 weeks to the middle of June, which means it's come down to about 14.3%. And this is the fourth consecutive time that we are seeing grocery prices fall. Perhaps this has got something to do with the numerous times grocery bosses, particularly the big four grocers, have been hauled in front of MPs to talk about their pricing. They have been urged to start trickling down those cost-cutting measures that they're seeing at the wholesale level to consumers. And the fact that we are seeing finally prices begin to fall consistently does give a glimmer of hope that perhaps, you know, change is near and we can go back to having more money in our back pocket at the end of the month.
About 3.6 billion pounds on the pound rallying against the dollar. Seems optimism is on UK inflation and interest rates.
Well, perhaps, yes. I think, you know, traders will always bet, won't they? But this information has come from a consultancy firm that's been looking at the pound, which, as you quite rightly said, has been very, very popular over the past few weeks. And this is all linked to interest rates. We've got key inflation data out tomorrow, and I believe economists are expecting the data to show that inflation has dipped slightly, but not as much as would prevent the Bank of England from raising interest rates. And I think that is what's piqued the interest from those who want to bet on the pound, because what we have seen in this country is that when interest rates are rising, the pound has been rising. So I think a lot of people are expecting perhaps the pound to reach much higher than $1.31, where it's at. We are expecting the Bank of England to perhaps raise interest rates to about 5.5%. The forecasting models have been so wrong over the past couple of weeks. A lot of people have put the Bank of England Governor Andrew Bailey under pressure to see whether or not the forecast models need to be changed. But whilst that discussion is going, you know, your buddies, Laddie, are betting on the pound, making a lot of money. However, it could be reversed anytime soon.
Yeah, we'll definitely be watching out for that. And yeah, pretty sky behind you right there, Juliana. Thank you so much. I'll catch you at 1:30. All right, now let's take a look at what Bitcoin is saying right now. See a 10-minute fresh increase above the $30,250 level, but failed to gain bullish momentum. And we see the sentiment 56 points. Greed. Back to greed. They were neutral yesterday, but we've seen the market now. Investors getting really greedy now, trying to pack up, buy most of those Bitcoins there. Let's look at the top cryptocurrencies we track there. We see Bitcoin holding, by a thread earlier this morning, $30,081. Did fall below that 30K level, did touch $29,000, down 0.67%. Ethereum, also trying to hold on to that 1,900 psychological level there, 1.34% bigger drop than Bitcoin. BNB, native token for the Binance Exchange, we're seeing some recovery there, 0.23%. Cardano down big again, 2.72%. XRP trying to find a new level at the 70 cents level. That's down 0.01%. Let's bring in Mary Imaswan now, financial market analyst. Hello, Mary. Good morning. Great to have you.
Good morning, Ladi.
So let's talk artificial intelligence now. I see some AI trading platforms are starting to come online. Any risk to this? And is AI going to be a great trader?
Well, so in the past couple of months, we've seen the power of AI, especially with what's happening and what we're seeing with ChatGPT. So we know that AI has the possibility, or rather the capability of assessing a lot of data within a short amount of time, which is something that is way beyond our human capacity. So when it comes to trading, AI has a possibility of analyzing a lot of data as far back as several months, which is something that we don't have that capacity to do, especially within a short period of time. So it could work as a great tool for those who are trading, but personally, I do not suggest that it is something that we should heavily rely on, because as we are seeing also with other AI systems out there, it is so important for us to verify that information. So if you're a newbie trader who knows little or nothing about trading, I wouldn't rest my back fully on AI or at least AI trading bots. But it is really helpful as a tool to help you analyze that data, and then you can make the decision. But always, like I would say, be very conscious of the risks. Because if you leverage a lot of money, that could, it will lead to stories that will touch the heart. So always be very cautious. But I think if you use it as a tool, it would really be helpful.
Right. I guess AI is smart and all, but you don't want to put all of your investments in the hands of AI trading for you. But who knows? AI might make you incredible money. Well, we see AI for All hackathon. It's a combination of artificial intelligence and Bitcoin. And that's ongoing now. How's that looking?
It's actually looking really great. We have a large number of people who have put in for the hackathon, and we're starting to see some really interesting projects come up. So the idea behind the AI for All hackathon is to find a way to combine AI and Bitcoin to democratize AI. So with all the different and interesting AI systems that we're seeing out there, one of the major issues is that when you want to make payment for these systems, for example, if you want to use ChatGPT 4, so ChatGPT 4 is actually paid. And for us who are in this part of the world, paying with our cards is not so easy. So when you bring something like Bitcoin into the mix, it makes it so much easier for us in the global south to easily make payments. We do not face, and then the companies, these AI companies also do not face chargeback issues, which is very frequent when it comes to paying with your credit cards, and they have to deal with that in the back end. So we can see that Bitcoin can really help in improving payments for AI, for the use of these AI services. In addition to that, I think in terms of creating this source of income for people who build these AI products is also really great with Bitcoin, because one, especially with the power of the Lightning Network, it makes it really easy for payments to be made. And for example, there's this really interesting project out there now called LNGPT. So LNGPT is literally ChatGPT, but you could pay for the use of this system with Bitcoin. So imagine the person who created this, they are able to easily earn an income through this without having to worry about,
right.
All these chargeback issues that could happen. So I think it's great. And for those who are developers and who want to explore what it's going to be like to build for AI in combination with Bitcoin,
Right.
the beauty about the AI for All hackathon is that they have workshops as well.
Okay.
If you check the Ball.fund playlist, you can check out all the workshops there and learn from.
All right, quite interesting. AI for all and trading with AI, quite interesting. Thank you so much, Mary Masson, financial market analyst. Great having your perspective today.
Thank you so much for having me.
All right, so yeah, we've been talking artificial intelligence there with Mary. Let's take a look at what the top gainers are saying. We see Sweet Token that's 7.96% up, 74 cents. We see Link also on that top gainers counter. So it's not looking so bad as greed. That's what we're seeing in the market now with 1 inch down 25%. All right, so that's how the market is looking today. To wrap on the program, thanks so much for watching. Don't forget, join us 1:30 for Business and Corporate for more updates and developments in the world of business. You can watch this again on our YouTube channel. Just flip over to YouTube, search for Channels Television, and you can watch all our productions. Have a profitable day. I'm Ladi Williams. Bye-bye.